Join me today as we talk about the huge scandal with Hillary Clinton. She was involved in the whole Russia collusion stuff, and she might be in deep doo-doo. The trade deals. What's happening on our side? Is it beneficial for the United States? I know. We're paying a tax on our goods. And Jerome Powell, they've got dissent in the Fed right now. So whose decision is it to lower rates or not? Stick around. You just might learn something. Welcome to the Eric T Conversation. I'm Eric T. Well, the news today is pretty big. I'm going to go over all the most explosive information that just came out about the whole Durham Annex, a 24-page classified intelligence summary that was recently discovered inside burn bags at the FBI headquarters. Yes, burn bags. Those are supposed to be used to destroy sensitive documents, but someone left one behind. What's inside is raising serious questions about the 2016 election, Hillary Clinton, George Soros, and the role of our intelligence agencies. Let's take a minute and just break down exactly what happened. It's going to be long, but bear with me. Special counsel John Durham spent years investigating the origins of the FBI's probe, specifically how it began and whether political bias influenced and decisions made by the DOJ and the FBI. His final report drew criticism and praise from both sides of the aisle. But now, months after we thought the whole book was closed, comes this annex, hidden, classified, and apparently not meant to be seen until now. The annex contains a batch of foreign intelligence intercepts from 2016. These weren't just rumors or third-hand claims. These were hard intercepts, emails, reports, and even CIA-verified summaries suggesting that senior Clinton campaign officials approved a plan to falsely tie Donald Trump to Russia in order to deflect from Hillary Clinton's own email scandal. According to the documents, Clinton campaign leadership greenlit a strategy citing polling struggles and an urgent need to shift the media narrative. And yes, Hillary Clinton was even named directly in these decisions. One particular excerpt from the annex is a jaw-dropping. It says HRC approved, which is Hillary Rodham Clinton. Julie's idea with the FBI support, we can put oil into the fire. The FBI, more oil into the fire. That quote allegedly came from a foreign intelligence intercept, and the CIA itself concluded that the report was likely authentic. It gets deeper. The Julie reference is believed to be Julianne Smith, a longtime Clinton advisor, and coordination apparently extended to figures within the DNC, the Clinton campaign, and third-party networks like the George Soros's Open Society Foundations. According to the annex, emails involving senior Soros officials, particularly Leonard Bernardo, show a disturbing level of awareness and possibility even strategic planning around the whole Russia smear narrative. These weren't just political operatives spitballing in emails. These were calculated decisions involving major political donors, media strategy teams, and even reference to corporate and cybersecurity firms like CrowdStrike. The implication? That this wasn't just spontaneous reaction to world events, but a premeditated campaign of misinformation, and more than that, one that may have manipulated U.S. intelligence institutions to do its bidding. But here's the most shocking part. The FBI and the CIA were reportedly made aware of this material back in 2016. CIA Director John Brennan even briefed President Obama, Vice President Biden, and key figures in the White House. He also referenced the intelligence to the FBI Director James Comey and Peter Sturtz, who was deeply involved in the Russia probe. And what did the FBI do? They did nothing. They didn't even open a counter investigation. They didn't follow up with subpoenas. They just sat on that information. At the same time, Crossfire Hurricane, the investigation into Donald Trump's supposed ties to Russia, was already underway. So while half of the FBI was chasing a theory later debunked, the other half was ignoring evidence that the entire thing may have been just planted. This has enormous implications, first and foremost for Hillary Clinton. If these documents are verified in full, and so far no credible source has challenged their authenticity, they suggest that Clinton not only knew about the false Russia narrative, but actively approved its deployment. It also raises serious questions about the campaign ethics, misuse of federal agencies, and potential violation of election laws. For George Soros, the fallout could be reputational and institutional. His foundations have long walked the line between activism and political influence. But this annex appears to show direct conversation between his organization leadership and political operatives planning a disinformation campaign targeting a presidential candidate. That's not only influence, that's orchestration. And finally, this may be the most damaging of all for the FBI and intelligence community. Why wasn't this investigated? Why did key leaders like James Comey and Andrew McCabe ignore the referral from the CIA? If they truly believed the Clinton materials weren't credible, why didn't they at least open an internal review? Some suggest that the agency was politically compromised. Others say it was just bureaucratic fail. Either way, this episode's eroded public trust even further. Republican lawmakers like Senator Chuck Grassley are now demanding full transparency. Grassley called the Durham Annex a cover-up of the highest order and is pushing for hearings. Director Tulsi Gabbard has indicated more files are coming. The Senate Intelligence Committee may soon be reviewing the new intelligence tying Clinton's campaign directly to foreign-linked disinformation strategies. But the political divide remains. Critics on the left say the documents are being weaponized. They're not saying they didn't exist. They're saying they're being weaponized, and they don't prove criminal behavior, only political hardball. Supporters on the right argue this proves everything they've said since 2017, that the Russia collusion investigation was a setup from the start. So where does this leave America? It leaves us in a place where the truth is murky, but the questions are sharp. Did a major presidential campaign use the FBI to target its rivals? Did foreign-funded organizations collude with American political operatives to mislead the public? And did our own intelligence leaders look the other way because the target was the wrong person politically? Those aren't partisan questions. Those are constitutional ones. As more files come to light, as burn bags give up their secrets, and once reduced memos hit the public, it's all up to us to demand answers. Not because who's being accused, but because of what it says about our institutions, about our elections, and about the thin line between politics and power. All this information that people are talking about right now and it's getting distributed, everyone's going to be saying on the left this stuff was fabricated. These documents have been corroborated with several witnesses that are involved in these emails and this scandal. So the more that comes to light, it's going to prove that we have a deep state in our country that thinks they can manipulate our elections and manipulate the people. And it's time those things come to an end. So the Fed's in the news. On July 30th, the Fed Reserve, led by Chairman Powell, voted to keep the benchmark interest rate at 4.25 to 4.5%. The decision made was kind of a weird one because in 30 years, two Washington-based governors formally dissented, calling instead for an immediate rate cut. Powell emphasized this was data-dependent wait-and-see meeting, with the U.S. GDP growing at a robust 3% in quarter two and the labor market remaining solid. He argued inflation, especially driven by the tariffs, remains uncomfortably above the Fed's 2% target. Actions, he insisted, we needed to wait for clarity. Now, but behind the scenes, the consensus were Governor Christopher Waller and Vice Chair for Supervision Michelle Baumann, both appointed by President Trump. They broke from the majority, urging a quarter-point rate cut. It was a substantive break in federal decorum, the first dissent by two governors since 1993. Waller and Baumann argued recent economic indicators, including slowing momentum in hiring and consumer spending, justified easing the policy rather than just waiting. Market indicators suggested growing risk to the Fed's employment mandate. Powell welcomed the dissent as part of the healthy governance, saying that the debate was thoughtfully argued around the table. He reiterated that most policymakers remain wary. Inflation is somewhat elevated, economic uncertainty is high, and there's still so much we got to learn from the lagged effects of the tariffs. So right now they're trying to figure out what the whole tariff thing's going to happen, because Trump is making all of these deals with all these countries, and it's on a scale that they've never seen before. So unfortunately, until we get that rectified and all the smoke is clear by the tariffs, because we're still working on Canada and some other countries, things are not going to be in place. The underlying core inflation readings persist. What does all this mean? First, Powell is staking a reputation on cautious independence, facing political pressure, including from President Trump, who has labeled him as too late Powell. He chose discipline over expedience, and I get it. We need things to change quickly. Second, The dissents signal a growing split within the Fed's leadership. These aren't just regional bank presidents, but board of governors. Their disagreement could point to an emerging fault lines in future decisions. Third, the financial markets are recalibrating. The odds of a September cut have fallen, which is not good. And the longer dated yields are rallying. Investors now expect the Fed to be more reactive and for rate cuts to come only if labor weakness depends on inflation sharply declining. Looking forward and what's going on in the future, the economic calendar offers critical data. Upcoming employment and the CPI reports and now the tariff-related price effects play out. Many economists still expect 1 to 2 cut rates by year end, with September being the earliest opportunity, but only after clarifying what's going on with the tariffs. So what's going to be taken from all this? The Federal Reserve is walking a tightrope, balancing inflation risks, political pressure, and emerging signs of labor and growth softening. Powell's stance underscores caution. Waller and Bauman's dissent injects urgency. That decision is set to define the Fed's path forward. So today I'm going to break down the trade agreements that happened yesterday and today ahead of the August deadline for the tariff thing. So first up, South Korea. The U.S. agreed to impose 50% tariffs on imports from South Korea, a reduction from the previously threatened 25%. Crucially, the U.S. exports South Korea will face no reciprocal tariffs. And that's what people aren't understanding. We're not going to pay anything for our goods to go to that other country. The people bringing our goods from there aren't going to have to pay anything, zero tariffs. That means we can sell goods to these countries, and that's a plus for the United States. Meanwhile, South Korea pledged to invest $350 billion in U.S.-controlled projects and purchase $100 billion in U.S. energy exports. By eliminating duties on American products, U.S. exporters get privileged access while Seoul faces a moderate 15% rate on its shipment into the U.S. This pattern repeats in framework deals with Thailand and Cambodia. Without agreements, both these countries would have faced enormous 36% tariffs on their goods coming into the U.S. beginning August 1st. While full details are still emerging, the agreements are reportedly slashing those rates, preserving U.S. export access to zero or low tariffs in exchange for trade stability. And in Pakistan's case, they avoided a looming 29% tariff. So Pakistan officials agreed to expand access for the U.S. purchases into their country, particularly in energy and mining sectors, in exchange for favorable terms for the U.S. exporters. These nations joined the EU and Japan, which also agreed to 50% U.S. tariffs on their imports while offering duty-free or neutral access for U.S. exports upon implementation by August 1st. So what does that all mean for everybody? First, those export sectors facing tariff risk prior to August 1st, agricultural, autos, pharmaceutical, techs, now generally retain access without new trade barriers. Even as the U.S. importer partners face tariffs from 50% to 36%, U.S. exporters enjoy steadier entry, reducing market disruption. Second, the deals integrate investment and energy purchase pledges used as bargaining chips to soften import penalties. For example, South Korea's $350 billion in U.S. investments and $100 billion in energy buys, the EU's commitment to buy $750 billion in U.S. energy through 2028. Third, uncertainty still looms, except countries need to finalize their deals. Like India, they're exposed to a 25% tariff. Brazil, 50%. Canada, they're getting hit with 35% tariffs. Now face steeper barriers to their exports to the U.S. and potential retaliation on U.S. goods in some sectors. For U.S. exporters, that's a mixed bag. Some will benefit from preserved access and green-lighted trade routes. Others may face retaliation if their export markets retaliate against U.S. duties. In effect, U.S. trade strategies has shifted to using tariff threats as leverage, incentivizing major trading partners to make trade plus investment deals. The upside, it's going to avoid the worst-case rates and predictable assets. The downside, deal terms often opaque, implementation uncertain, and risk of investment pledges may never materialize. Over the next coming weeks, the markets and exporters will closely watch how these non-tariff barriers are managed and whether promised energy purchases and capital flows happen. time is going to tell what's going to happen with all these trade deals over the next couple of months. My personal opinion is that by 2026, January, February mark, we should start really seeing the benefits of these trade deals within the U.S. and our exports. Because remember, a lot of these countries aren't allowing us to export stuff to their countries. And when we do, it's a high tariff. So these countries aren't bringing in our products, our automobiles. You can't get an automobile in the U.S. and Europe. So these barriers have been lowered. So hopefully manufacturing can increase here in the United States so we can have more exports to other foreign countries. Well, that's it for today. Join me next time for a little chit chat, some observation, and some good old fashioned conversation. Thanks.